Welcome to the Harvard Business School Private Equity and Venture Capital Pre-Holiday Bash. As many of you might know, during our last event at Arlington Racetrack, we talked about betting on horses versus betting on companies. And one of the questions that was asked by Jim Greenberger, private equity law advisors, is what is more important? Is it the horse or is it the jockey? To an extension to that, is it the car or is it the driver? So let's talk about the car first. Tell us about yourself.
How you guys doing? My name is Mir. I'm actually the brand manager for Lamborghini at the store, and I've been here for about 5 years. And I guess the car that we kind of just wanted to show you guys today was the Lamborghini Aventador, which is what you see over here. This is their flagship. This is the fastest car that they build over there. It's on the top 10 of the world's fastest cars.
Well, thank you very much. And we're going to talk about the same topic from a private equity and venture capital perspective.
My name is Matt Moog. I'm a technology entrepreneur here in Chicago. Have been in the city for about 20 years. I took I originally started working for Microsoft, but took a company public and ran it for about 10 years. 7 years ago, started another technology company called Viewpoints.com, and have since spun out 3 companies out of that and created a digital business incubator called Wavetable Labs that we're spinning other startups out of, and founded the Firestarter Fund, which is a early stage technology investing group of about 45 other tech CEOs where we invest in early stage tech companies.
I'm a reformed private equity investor. I did that when I graduated from Stanford for business school for about 5 years, working for Sam Zell here in town, buying manufacturing companies. And then I left and moved into investing in software and technology businesses. And MK Capital has 2 funds, manages about $250 million. We're offices in Santa Monica, Ann Arbor, Chicago, and we focus on software and digital media.
Based on the SEC documents, when a company actually goes public, 49% of the founders are no longer the CEOs. So does that mean founders are not important? I mean, is the business idea that venture capitalists bets on?
I think it's a very sector and stage specific question, right? So I think in the private equity world, you'll see the people here going, the GTCRs, historically have said that it's been management first because they invest in markets and businesses, frankly, that are much more mature, where there's no doubt there's going to be a healthcare service company doing infusion therapy. That market's not going to go away, and execution really is paramount, right? I think you get into the technology world, and sometimes you're really right on a market. Sometimes you're really wrong, and when you're right, I mean, I don't think Pierre Omidyar was the second coming to Jack Welch, right, as a manager, but he had a really good idea, eBay, and he got there first and built the brand.
Do we have a conclusive answer? Is it the car or the driver, or not yet?
It is, to me, conclusively and without a doubt, it is the entrepreneur, and here's why. Because if you invest in a business where you like the idea and you don't like the entrepreneur, you will go find an entrepreneur who can run it. So at the end of the day, a good idea has to have a good management team to make it successful. A good management team can find an idea to then go make successful. So it's mixed and it's varied and it's nuanced, et cetera. You can't run a company without people running it.
Thank you very much, Matt and Mark, for your time here.
You can take a test drive.